Welcome Chennam Serena. In this video, we are going to discuss the money market. The money market is a place for trading in money and short-term financial assets that are close substitutes for money. It provides an opportunity for balancing the short-term surplus funds of the lenders or investors with the short-term requirements of the borrowers. Now let us see a definition of money market. The definition given by Geoffrey Crowther says that money market is a collective name given to the various forms and institutions that deal with the various grades of near money. Now let us discuss the features of a developed money market. The important feature is that for a developed money market, there must be a developed commercial banking system. And the banking system should be well developed and organized. And the public should have banking habits also. These two things are complementary. The commercial banks are the most important suppliers of the short term funds. And the commercial banks are quite often called as the nucleus of the money market. So, for any developed money market, an important feature is a well coordinated and well integrated money market with commercial banks. And in India, we know that the organized and developed commercial banks are there, but their activities are confined to certain areas only. As there are a large number of financial institutions working in their own ways, the interest rates charged differ from institution to institution. So in India, there is unorganized money market because of the indigenous bankers and the money lenders in the rural areas, and some Marwaris etc. exist in the urban areas also. So the money market is not well organized or integrated because of the less developed commercial banking system in existence. And the second point is the presence of a central bank. In a developed money market, there is always an apex central bank. That means it is the head of the money and the banking authority. And it is a central bank that is the lender of the last resort. The other member banks can borrow from the central bank during emergency. That is why the central bank is called the guardian of the money market. It's a very powerful bank to control money supply as per the needs of the economy. And the central bank is also the reservoir of all types of funds, short term, medium term, as well as long term. So they can act in a more professional manner as compared to the government. Now, the next point is this existence of a sub-market. A developed money market has the most developed and sensitive sub-markets. And the money market is actually a group of various sub-markets, each dealing in loans of various maturities. There will be markets for call loans, markets for collateral loans, acceptances, foreign exchange, bills of exchange, both commercial and the treasury bills. And if these sub-markets are not in existence, then we cannot say that the money market is a developed one. The larger the number of sub-markets, the broader and more developed will be the structure of the money market. And these sub-markets must be integrated with each other. If the interest rate is high in one market, the borrowers can move to sub-markets where the interest rates are low. And the lenders will move to those sub-markets which can provide them higher interest rate. Thus, it facilitates the mobilization of resources from one market to another. In underdeveloped economies like India, various sub-markets are not in existence or they are not integrated. So there is a lack of coordination and integration among the different sub-markets. And the interest rates in different sub-markets also vary considerably. The undeveloped money market does not possess all the important and essential sub-markets, particularly the bill market. And the next point is near money assets. In a developed money market, There is a large quantity and variety of financial instruments such as bills of exchange, treasury bills, promissory notes, government bonds, etc. If the number of near money assets are more, the money market will be more developed and the bills are drawn in a standard form and are accepted and discounted also. There should be a large number of people also for buying and selling of these credit instruments. If the near money assets are not available in sufficient number, the money market cannot be a developed one. And the next point is the availability of ample resources. Another feature of developed money market is this. A developed money market has easy access to financial resources from both within and outside the country. Persons in the foreign countries think it's safe and profitable to invest money in highly liquid assets in developed countries. It is the availability of cheap facilities for the remittance of funds from one place to another which has resulted in raising the resources. The underdeveloped money markets do not attract foreign funds because of the political instability and the absence of stable exchange rates. So, a money market may be developed even if it cannot attract short term funds from foreign countries. And the next point is integrated interest rate structure. The interest rates that prevail in different sub-markets are integrated with each other. A change in the bank rate results in equiproportionate change in the interest rates which exist in case of different sub-markets. It is due to this structure of interest rates that the central bank can exercise control on the functioning of the money market. In addition to these factors, many other factors which are responsible for the money market to be a development to be a developed one are also in existence, like the industrial development, the stable political condition, economic crisis, boom, depression, absence of discrimination, etc. All these factors make a money market developed one. If there are issues with certain factors like this, we cannot say that the money market is a developed one. Only if everything is in favor of a money market, we can say that market is a developed money market. And next, let us discuss the functions of a money market. One of the important functions of money market is the economic development. Actually, the money market provides short-term funds to both public and private institutions. And these institutions need money to finance their capital needs. And the money market assures the supply of these funds. The financing is done through discounting of bills, acceptance houses, discount houses, through brokers, etc. So the money market helps in the economic development by providing financial help to trade, commerce, and industry. And the next point is profitable investment. The commercial banks deals with the deposit of their customers. The banks are required to put their assets into cash form to meet the directions of the central bank. And they have to put their excess reserves into the productive channels to earn income on them. The aim of the commercial banks is to maximize profits, and the excess reserves of the banks are invested in the near money assets to ensure liquidity. And the purpose is to ensure liquidity without foregoing profits. And the next point is borrowings by the government. The money market actually helps the government in borrowing short-term funds at very low rates of interest. The borrowing is done on the basis of mainly the treasury bills. But in case the government resorts to deficit financing or something like that to print more currency or to borrow from the central bank, it will be merely raising the money supply over and above the needs of the economy, and hence the price level will boost up. Thus, the money market is very useful for the government since it meets the financial needs of the government. And the next point is the importance for the central bank. If the money market is well developed, then the central bank implements the monetary policies successfully. And it is only through the money market that the central bank can control the banking system, and thus they can contribute to the development of the trade and commerce. And as we all know, the money market is very sensitive. A change in one submarket affects the other submarket immediately. It means the central bank can affect the whole money market by changing just one submarket. So that is another function of the money market. Now the next point is the mobilization of funds. The money market helps in transferring funds from one sector to another, and the development of any economy depends on the availability of finance. No country can develop its trade, commerce, and industry until and unless the financial resources are mobilized. And the next function of the money market is the self sufficiency of commercial banks. In case of prevalence of a developed money market, the commercial banks need not borrow from the central bank. In case the commercial banks have a scarcity of resources, they can meet their requirements by recalling some of their loans from the money market instead of borrowing from the central bank at a higher interest rate. And the last function of the money market, or you can say the significance of the money market, is the savings and investment. It helps in promoting liquidity and safety of financial assets. By doing so, it can help in encouraging the savings and investment. And the saving and investment in equilibrium, the equilibrium of a demand and supply of loanable funds, helps in the allocation of resources. These are the significance of a money market in the economy. Now that's all about the money market. Thank you for watching this video. For more videos, subscribe the channel.